Uranium down, lithium up. Is that right?
Lithium steady.
Uranium down, lithium steady. Oh, brilliant. That sounds intriguing.
You must think of the future, Woods.
Callum, welcome. Fat Tail Daily on a Wednesday. I look forward to nothing more. How you doing?
Very good to be with you, Woods.
Good, good. Now you must be sort of loving the new momentum that's found in the markets. But today you're writing about it's a bit of trading psychology behind it as well. You take the recent pullback in the uranium sector as an example, and you contrast a very well known stock in that sector, Paladin's dramatic stock drop, with the relatively stable lithium stocks facing similar operational challenges. So I was going to ask you, what does this tell us about market psychology and the importance of timing when it comes to investments, especially in the commodity markets, I guess?
Well, what I'm talking about, there's nothing particularly exciting about lithium right now, but what I want to talk about is the direct price action that happens on the market. Now, anyone watching this, if they're interested in resources, will have been pitched or read about the excitement going on in the uranium sector, that it's coming back to life. That, of course, Trump is pro-uranium. There's big energy demands from AI. And so it's logical that you might go to buy some of those uranium stocks or look to trade them. However, yesterday, Paladin, the key stock in the uranium sector, got absolutely hammered, almost 30% down at one point on the day. And the reason was that they came out and had to downgrade their expected production. They're having some problems ramping up their mine in Africa, of course, and the market hadn't priced that in. So when you run with a so-called hot sector like that, that's the risk that you run, that they disappoint and you can get really hammered on the day. So my first port of call is where I tee off the great Jim Rogers, who always said that he looks down before he looks up. So he wants to make sure that he, as much as he can, he doesn't get smashed like that on the day with that type of news. Now, the interesting contrast is with what's going on in the lithium sector. It is a terrible industry at the moment. The companies can't make money. The prices are terrible. So the miners, Mineral Resources, just came out and said that today that they're going to shut their mine down, their lithium mine, the Bald Hill mine. Liontown is cutting production. Pilbara Minerals is deferring their second plant, and there's another one, Pilbara. Piedmont just came out again; they're losing money. So the news is absolutely terrible. But why is this notable? Because the shares are not selling off that hard. So that tells me, or tells us, that the market is fully aware of how difficult things are in the lithium business. Now, again, to tee off the great Jim Rogers, was that when things were in distress was when he got the most interested, because you get a look at stocks that have already been hammered down. And so he was famous for making huge returns. And the only way he was able to do that was starting with stocks in great distress.
I was My second question was about that philosophy of looking down before looking up, and I was going to ask you what that means, but you preempted my second question. So let's take that one step further. So you mentioned that lithium is experiencing a cyclical downturn in a structural bull market. So what specific indicators would signal then the end of the cyclical downturn?
Well, I mean, as again, the reaction of the market would suggest that the stocks are bottoming out now on the stock market. So the investors are already looking ahead to a potential recovery in lithium prices in 2025. As it happens, I was on a phone call with a fund manager in the clean energy sector last week who suggests that the price will start recovering in 2025. We know that there's big demand out of China because they have the whole industrial strategy is electric cars. Tesla itself is still building out its factories all around the world to pump out Teslas, plus the solar panels. The growth of solar panels all around the world is really big. So overall, the demand for clean energy is not going away because the demand for energy is only going up. So we're going to need, and again, referencing this fund manager, we need renewables, we need coal, we need oil, gas, uranium, we need it all. So that suggests to me at some point the lithium price has to recover because as it is, the mines are shutting down. So at some point, the existing stock that's out there is going to get run through, and that's when you get a recovery in prices. So I, from here on in, will be watching lithium prices very closely. As it is, it'll just be a guess to say when it's going to happen, but best guess is next year. And if the market gets a sense of that, it will begin to run up lithium stocks before it happens.
Yeah, well, you're not the only one keeping an eye on it. I mean, Rio Tinto's interest in Arcadium Lithium suggests in and of itself long-term confidence in the sector.
Absolutely.
How important to you are those major player moves in your analysis of the commodity market bottoms?
Well, again, I mean, alluding to this fund manager, he suggested that lithium has to sort of do it. Rio has to make their move on the downswing. That's what they're doing. They're buying in the downswing of the lithium sector with the idea that in 10 years it'll pay off for them down the track. Now, those of us who run individual accounts can't always necessarily look that far out, or we're looking for a closer term switch in momentum if you're trading momentum or whatever. I mean, you could, in theory, start accumulating them now, but you're preempting the price recovery. So there's no guarantees that it will recover, of course. So you always have to be very careful with that in the commodity sector. But if, oddly enough, electric vehicle growth, demand growth of lithium is still happening, it's just the rate of changes has fallen away relative to the extreme expectations and then the huge price spike that we had in 2022.
Yeah. So what about 2025? Like, is your analysis focused on the commodity markets as a whole, or is there any other sectors that you're getting excited about?
I mean, there's lots of sectors to be excited about, but what I know about this dynamic, if you want to go for a potentially really big return, generally speaking, you have to start with the stocks in distress, because so that when they re-rate again, you get that massive uplift. If the stocks have already run up, it's harder to get a big return out of it. So lithium is at least tabling that potential, because if we're right and say that this is a really major downturn, it's crushed all the stocks, but the actual long-term demand, as indicated by Tesla and BYD and Rio, is still hold, at some point you can get a really big uplift back. The question is when that might happen. Now, there's a recognized guy called Joe Lowry who seems to think that by 2026, lithium will be on its way again into another potential price spike by 2030. So within, again, it's a 5-year time frame. It's quite long, but this is the share market. It's going to look ahead. So 2025, I would expect the lithium stock sector to start recovering.
Well, there you go. If you'd like to read Callum's article on the piece on today's thoughts, it's the link to the article is in the description below. Let us know what you think. And Callum, thanks very much for your time.
Pleasure.
Thanks for tuning in to FatTel Daily. If you're ready to take a new approach to building wealth, avoiding the same old mainstream ideas and investigating new market trends, then make sure to hit the subscribe button and turn on post notifications so you don't miss a single video. And as a thank you, we've got a free report just for you. It is packed with actionable insights that show you how to capitalize on an alternative investment idea that you'll unlikely find anywhere else. You can download it right now by clicking on the link in the description below. So, if you're ready to discover strategies that the traditional market just doesn't offer, grab your free report. Until next time.